What if I told you there's a piece of plastic in your wallet that can either make you wealthy or quietly destroy your finances while you sleep? Most people use credit cards every single day, but almost nobody actually understands how they work. And that gap in knowledge, that's costing people thousands of dollars a year. My name is Chris, and today I'm going to explain credit cards so clearly, so simply, that by the end of this video, you'll know more than most adults do. Let's go. What is a credit card? Let's start from the very beginning. You want to buy something, a new pair of shoes, groceries, a flight ticket. But you don't want to use your own money right now, so instead, you hand over a small piece of plastic. That plastic card lets you borrow money from a bank to pay for things today. Then, you pay the bank back later. That's it. That's a credit card. But how it all works underneath the surface? That's where things get interesting. How does a credit card actually work? When you swipe or tap your credit card at a store, your bank steps in and pays for that purchase on your behalf. You now owe that money to the bank, not the store. You typically have around 30 days to pay the bank back. During that window, no extra charges, no penalties, nothing. Pay the full amount on time, and you've essentially used the bank's money for free. But, and this is a very important but, if you don't pay back the full amount on time, that's when the problems start. We'll get to that. How do you get a credit card? Here's the thing, banks don't just hand out credit cards to anyone who walks through the door. Before approving you, the bank wants to know one thing. Can we trust you? To figure that out, they look at your credit score. A credit score is a 3-digit number that tells lenders how reliable you are with borrowed money. It's based on whether you've paid back things on time, how much debt you currently have, and how long you've been managing credit. In the United States, scores range from 300 to 850. A score above 740 is considered good. Above 800? Excellent. Below 580? That's going to make things very difficult. The better your score, the more likely you are to get approved, and the better the terms you'll receive. Credit limits now. Getting approved for a credit card doesn't mean you have unlimited spending power. Every card comes with a credit limit, a cap on how much you're allowed to borrow. For beginners, that limit might be around $1,000. As you prove you can handle credit responsibly over time, banks will increase that limit. Think of it like trust. The bank starts small. You prove yourself, they give you more. Why use a credit card at all? You might be thinking, if I have money in my bank account, why not just use that? Great question. Here's why millions of people choose credit cards. First, emergencies happen. Life is unpredictable. A credit card gives you a financial cushion when unexpected expenses hit and you need to spread the cost over time. Second, credit building. If you ever want a car loan, a mortgage, or any major line of credit, you need a credit history. Using a credit card responsibly is one of the fastest ways to build that history and raise your score. Third, security. If someone steals your debit card and drains your bank account, that's your actual money gone. With a credit card, it's the bank's money at risk. Banks move fast to protect themselves, which means they move fast to protect you. Fraudulent charges are typically reversed with a simple call. Fourth, and this is the big one, rewards. Credit card rewards banks want you to use their cards, so they pay you to do it. Rewards come in several forms depending on the card. Some offer cash back. A percentage of every dollar you spend comes back to you. Spend $500 on groceries, get $10 back. It adds up. Others offer travel points redeemable for flights, hotels, car rentals. Some people fund entire vacations purely through credit card points. Then there are sign-up bonuses. Spend a certain amount in the first few months, and the bank drops a large bonus in your account, sometimes worth hundreds of dollars. And at the top of the ladder? Premium cards. These are reserved for high-income individuals and come loaded with Perks Airport lounge access, concierge services, free hotel nights, travel insurance. The annual fees are steep, but for frequent travelers, the math often works in their favor. Quick pause if this is making sense and you want to actually understand how to use credit cards to build real wealth instead of debt. Stick around. The next part is where most people go wrong and where you're going to get a serious edge. Also, if you haven't subscribed yet, do it now. This channel is committed to making financial concepts actually make sense. Credit card debt, the dark side, all right. Here's the part nobody wants to talk about, but everybody needs to hear. Credit cards are one of the most powerful financial tools available. They are also one of the most dangerous if misused. When you don't pay back your full balance on time, the bank charges you interest. Interest is simply the cost of borrowing money.
And credit card interest rates are notoriously high, often between 20% and 30% per year. Here's how it hits you. You borrow $1,000. Your card has an interest rate of 24% annually. That's 2% per month. You forget to pay, or you can only afford the minimum payment. The bank adds 2% of $1,000, that's $20 to your balance. Now you owe $1,020. Next month, they charge 2% of $1,020. That's $20.40.
Now you owe $1,040.40. The month after that, 2% of $1,040.40. And so it goes. This is compound interest. And it is relentless. The debt grows not just on what you originally borrowed, it grows on the new, larger balance every single month. The longer you wait to pay it off, the faster the number climbs. This is why so many people feel trapped in credit card debt. They're making payments every month, but most of that payment is just covering the interest, barely touching the original amount they owe. The fees nobody mentions beyond interest. Credit cards come loaded with fees that banks don't exactly advertise loudly. Late payment fees. Miss your due date and you get hit immediately. Annual fees. Some cards charge you simply for having the card each year. Premium cards especially. Always check this before signing up. Cash advance fees. Try withdrawing cash using your credit card at an ATM? That's a fee, and cash advances typically start accruing interest immediately with no grace period. Foreign transaction fees. Use your card abroad? Some cards charge 2-3% on every international purchase. Over-limit fees. Spend beyond your credit limit, and some cards penalize you for it. The list goes on. Reading the fine print before signing up for any card is not optional, it's essential. How to actually win with credit cards, here's the mindset shift that changes everything. A credit card is a tool. A hammer can build a house or break a window. Same hammer. Different hands. The outcome depends entirely on how you use it. These are the principles that separate people who benefit from credit cards from people who get buried by them. 1. Always check the APR before applying. The annual percentage rate tells you exactly how much interest you'll pay annually, including fees. It's the most honest number on the card agreement. 2. Choose a card that rewards what you already spend on. If you spend heavily on groceries, get a card with grocery cashback. If you travel constantly, get a travel rewards card. Don't contort your spending habits to chase rewards. 3. Spend only what you can pay back within the month. This is the cardinal rule. If you can't afford it in cash, you probably can't afford it on credit either. 4. Keep your credit utilization below 30%. This means if your credit limit is $1,000, try not to carry more than $300 on the card at any time. This protects your credit score and keeps debt manageable. 5. Track every purchase. Credit cards make it dangerously easy to lose track of spending. Review your statements regularly. 6. Set up autopay. Not just reminders, actual automatic full payments on or before the due date. This removes human error from the equation entirely. 7. Always pay in full. Minimum payments are a trap. They keep you just compliant enough to stay in debt indefinitely. Credit cards are not good or bad. They are powerful, which means the responsibility falls entirely on you. Used right, they build your credit history, earn you free travel, protect you from fraud, and give you financial flexibility when life gets unpredictable. Used wrong, they silently drain your wealth through compounding interest and fees you didn't even know existed. Now you know how they work. Now you know what to watch out for. And now you have the foundation to make an informed decision. Chris will be back soon with more content designed to give you real financial clarity, not confusing jargon, not generic advice, just the stuff that actually matters. If this video helped you, share it with someone who needs it. Drop a comment below with any questions. And subscribe if you want to be the person in the room who actually understands money. See you in the next one.